just a short recap on what happened here. We were looking at Gilead. It gapped up today and then it moved all the way down to the place where, exactly to the place where it closed the gap. And we were expecting a pullback right over here, which currently happens. And my question to you guys was, why do gaps like this close 80% of the time at the same day they are open and 90% of the time at actually up to 10 days from the day they are open? And what we're seeing right now is the fact that the gap closed and that there's a small pullback here. Now I don't know whether it's going to continue lower right now or up. I do suspect, however, that that's probably going to slow down here or even move up. I don't really know that. But the fact is that it closed the gap, and exactly at the point where it closed the gap, it moved up just a little bit. And the question is why? And the answer is very simple. It's institutional money. Now think about, and again, I want to remind you that institutional money is 80% of the trade in Gilead. And not only in Gilead. Look at Gilead. It has a volume today of over 8 million shares, close to 9 million shares. Probably going to go over 10 million shares today. So we are always trading those stocks, approximately 3,000 of them in the US markets, which volume is more than 1 billion shares a day. And why do we do that? We do that because 80% of the money in those specific stocks that we're trading is coming from institutional traders. Now, institutional traders have different targets, different needs, different games. They're playing a different game than we do. Think about an institutional trader who came in yesterday and started buying Gilead. Why should he buy Gilead to start with? Well, he doesn't buy Gilead because Goldman Sachs wants to invest in Gilead, or maybe yes, but usually that's not the answer. Usually there will be somebody who asks him to buy Gilead, a fund, for example. Somebody decided they should invest in Gilead, so they go up to Goldman Sachs or Merrill Lynch or whatever, and they tell them, we want to buy 1 million shares. And Goldman Sachs appoints a trader, and they tell him, your job is to buy 1 million shares, but you have to buy it at a low price. How do you buy at a low price? Well, that's where the VWAP comes in to help. You see this VWAP line here? We have discussed this. There's a different lesson about the VWAP, and as you probably know, the trader is supposed to be buying under the VWAP. This is why all the time you would see a stock moving under the VWAP, over the VWAP, and then the institutional sellers come in and it moves down again. So it played all the way around the VWAP, and that's again a different story. Now think about the trader who, and of course at the same time there's a person who was asked, a trader who was asked to buy 1 million shares. At the same time there's a trader who was asked to sell maybe 2 million shares or 1 million shares or 500,000 shares. I don't really know that. Think about the seller. The seller was selling over the VWAP yesterday. He managed to sell 500,000 shares, and I don't know the exact numbers, of course, but he sold, let's assume he sold 500,000 shares. He wake up this morning and he see the price gapping up by what, 73.20 to 75.20. So this guy looks at the price and you see a pop-up of 4%. Now that means just one simple thing, and very clearly, it means that if he managed to sell the rest of the 500,000 shares over the pivot point of yesterday, that's a big bonus. So he tries to sell at a higher price than the pivot point of yesterday, and his bonuses are calculated on the pivot point of yesterday because there need to be some kind of a method, and the pivot point is very important for that. So he tries to sell, and he doesn't sell too much, because when he sells too much, then the price will fall down. And of course, there is a competition between different institutional traders who are the sellers today. So those who are coming to work today being the sellers, and of course at the same time there are buyers too, but the buyers will try to buy under the VWAP, the sellers will try to sell above the VWAP, and as long as they sell over the pivot point of yesterday, they're getting big bonuses. And the minute they stop selling the stock is the minute where it closes the gap, because once it closes the gap and moves down approximately to yesterday's close, then that's the place where no more bonuses, no more bonuses, no more selling, and there comes the pullback. Is that clear, guys? Any questions about this? You got to realize all the time that we are not the one who are alone in the market. I mean, we are actually zero. We are just 20%, and we are a very small fraction of this 20%. And the main players are those who are institutional players, and they decide really where the price is going. It's not me, it's not you guys, it's them. So we need all the time to think about what they're doing, how they're doing that, when will they sell, when will they buy. We have discussed the VWAP importance a few times. There is a lesson about this, and we all know that the most important thing about trading is knowing what the other side is going to do. Because when you're buying something, somebody else is selling it to you. And the person who is selling to you thinks at the moment that he's pressing the button, he thinks that he's selling at a high price. Otherwise, he wouldn't have sold it to you. So at the same time you're buying, he's probably thinking that you're an idiot. And you need to realize if this person on the other side is an institutional trader, and what does he want when he sells? Is it just getting his bonuses? Is it the fact that he believes that the price is going to move down or up? So you need to get into his really mind, understand his psychology, understand how he's being paid for that. And while you know what's going on, while you know what is in the rule book of those institutional traders, then you know how to handle them. And the way to make money in the market is to understand what the other side is thinking about and what's going to happen next. And this is not that complicated, not that complicated. And we expected this pullback over here. We were talking about this move, and there it comes. I will not be 100% right, you know, guys, but if we write more than 50% of the time, then we're good. Okay, hope that was a good lesson for you.